Welcome to today's NWR Communications Virtual Uranium Conference. My name is Alex Cowie, and I'll be your host today. Nuclear power already provides 10% of the world's electricity, and with the nuclear renaissance unfolding, the size of the global nuclear fleet is set to increase significantly. China and India are rapidly expanding their nuclear fleets, and President Trump's executive orders to quadruple US nuclear capacity is a game changer, given the US is already the biggest producer of nuclear power today. This nuclear revival is driving a large and predictable increase in future uranium demand. And meanwhile, uranium supply is constrained, inventories have run down, and a future deficit is on the cards. These market dynamics, as well as climate goals, energy security concerns, and unprecedented government support, are driving uranium prices and creating a huge investment opportunity. Today, we'll hear from 5 uranium companies poised to capitalize on this massive structural trend. We'll also get an outlook on the uranium market from today's keynote speaker, Josh Baker. Josh has covered resource companies from the buy side and the sell side. He has been an analyst for Taylor Collison since late 2023, currently covering names within the uranium and silver sectors. So without further ado, please take it away, Josh.
Thanks, Alex, and hello everyone, and thanks for joining us today. I guess the focus of my sort of window will be to talk about, some of the key thematics on the demand side, and then probably to talk about a bit more of the supply element on the short to mid-term, and then how that kind of translates into how to think about investing on the equity side as well. I think everyone's pretty familiar with that sort of longer-term supply and demand thematic, the big shortages that really do open up in the 2030s, and then how that's potentially getting amplified by the US, nuclear renaissance as well. So, on that note, on the demand, the big theme since late last year is definitely AI, big tech, data centers, very power hungry. Ideally, they need strong, capable baseload power, ideally green as well. So this has really kicked off that push into, like I said, nuclear renaissance on a private sector basis as well, which is not only just through the power purchase agreements that are going to restart nuclear power plants that are already existing in the United States, as we've seen with like Microsoft and Constellation, but also, how we see Google partnering with SMR companies to help drive the adoption of those technologies and have more discrete power supply options as well for their data center build-outs. Nuclear policy in the US is probably the only thing that's actually bipartisan. There's, a lot of the current initiatives and plans that started with the prior administration and now getting amplified with this administration. And then even on the shorter term horizon, you've still got build-outs in China that will incrementally add to demand, and the profile there, the EU has reversed, or many EU countries have reversed, so closures are getting delayed and put off. It sort of keeps that shorter term demand. So sort of circling back to the United States, more tangible progress on a renaissance in nuclear has been supported by the executive orders that were done in May 2025. A lot of that has focused on pretty much everything downstream of mining, but as long as any of that gets delivered in some capacity, there will be that follow through to mining, because the targets, even if you achieve a quarter or a third of them ultimately by 2050, it's going to require an absolute boatload of uranium as well. If you just only achieved a quarter of a third of those targets to pretty much 4x the fleet, you effectively double the fleet, double the uranium requirement, and that uranium production really doesn't exist today as well, and nor does a lot of the conversion capacity. So, the entire supply chain effectively gets built out there as well, and then I think from those executive orders, many facets of them require 30 to 100-day windows for regulatory bodies, departments, to sort of submit how they're going to deliver on the EEO. So what regulations need to be changed, how do you restructure these organisations, approval processes, etc. So I think over the remainder of this calendar year, we'll start to see how action plans are effectively developed to deliver on the objectives of these executive orders as well. So that should then set up, much more tangible plans and what targets are likely to be achievable and what horizons you can start to bring in these demand assumptions, and how base cases sort of then potentially trend more to these high case scenarios that consider these outcomes as well. Even the more recent Pennsylvania AI and Energy Summit sort of reiterated a lot more of these plans and started putting a few more numbers around the investment quantums as well. So, you know, a lot of that was skewed to data center build outs and the like, billions of investment there, as well as other initiatives of several billion that would contribute to building out, you know, the energy infrastructure to back all of that, and in particular Westinghouse as well, which is obviously trying to be the 10 nuclear reactors that are under construction by 2030, which aligns with the executive orders as well that wanted 10 large-scale power plants under construction by then. You know, and it continues to build on a lot of the regulatory drivers as well from the United States perspective, where the Russian bans from the prior year is then sort of split the sector in two. So you have a western side and an eastern side as well. And potentially on a bit more of a short-term basis, you know, when we talk to people in the sector, there's been some interesting insights that come out of that. You know, utilities of any scale are talking to uranium developers of any scale, which has not always been the case in history. When you sort of look outside of China but remain in Asia, you're starting to see a lot more activity out of Korea and Japan. You know, a very recent report that Kansai Electric Power Utility Company is looking to, you know, start building reactors and laying the groundwork there to find sites that are suitable for it. So, which is a very big, you know, 180 on the experience of Japan's participation in the market pretty much since the Fukushima event. And then what you're seeing that even though in a light contracting period, you know, these terms that are being offered are still sort of sitting within floors in the 70s, encroaching on the 80s. That term price is held quite well, and you know, the caps that are being offered are well into the hundreds as well. So it provides a pretty good range of outcome for any emerging producer or current producer rolling contracts that lock in better pricing outcomes over a longer term production profile. And even sort of just taking some of the pressure off with this spot sort of getting to NAV and raising 200 million, you know, can fund operating expenses, has a capacity to buy more pounds. You know, that's taken, you know, reverted a narrative that was starting to emerge that maybe they have to start selling pounds to cover those costs. So, you know, with a lot of that out of the way, it's definitely creating a more positive set of tailwinds for shorter term demand. That then leads into this longer term demand thematic. But a lot of this particularly driven by the US at the moment as well. So there's sort of talk on the supply side. Often that can get forgotten. Well, in my view, it gets forgotten about as we talk about all the demand. So it's very positive. Supply has been an interesting thing to evaluate over the last year or two as well. So, you know, calendar year 24 was a year of supply responses. So whilst there was a lot of attention on Kazatomprom being behind its original plans, there was a delta shift there where we passed the nadir of the downgrades, asset construction delays, etc. There as well. So, you know, they are potentially on track to hit that target of about 30,000 TU. It's probably delayed by 12 to 18 months at the current rate, but the change there is that they're back on that production growth profile, albeit slower and a bit more delayed than before, which has sort of taken pressure off that extreme that drove, you know, spot prices back above $100 a pound in early 2024. You know, Cameco again had those ramp up issues in 23 and sort of proven that they can get things back on track and should produce at nameplate as well. And that's, you know, some pretty material sort of supply that comes to the market, albeit it's for the most part contracted. And then, you know, the brownfield restarts, they did come. They took a bit of time to digest and sort of ramp up and hit the market, as they haven't all sort of been smooth sailing. But sort of going forward, when you think of the next year or two, obviously, because they're a problem, sort of should incrementally increase production. You know, their prior guide on some of those new growth projects that were coming on, if they can sort of meet that timeline, you sort of start talking 26 to 27 plus TU, which brings a little bit more into the market. You know, these brownfield restarts that have commenced, you'll start to get the full contribution as they achieve nameplate. So this is that first wave that's getting fully worked through the market over the next 12 months. And then probably outside of that, you do have these elements of existing mines that are expanding. Rossing's a great example of that, where they've put in capex to extend the life of mine. That instead of that operation sort of ending in the next year or two, it's now going to run for another 12 years. And they do talk about putting more money into exploration and considering expansions or extensions to the life of mine there. I think that's one element people do forget about, that when you have higher prices, it can incentivize lower cutoffs. You can increase the resource that way. The grade might drop, but you still get to increase the resource. You get higher reserve conversions, and you can squeeze a little bit more out of existing mining operations. And if you look at commodities like lithium and copper and the like, you see when prices go high, very marginal stuff can run a lot harder, and it can incentivize it. And they tend to be a bit more quiet in the sense that not everyone's sort of looking at those supply drivers, but they do come and sort of bring in that incremental supply that probably caps those extreme upside scenarios as well. So they're things that be mindful of sort of going forward, that they will provide incremental supply sort of in the short term, but they do run out of their ability to drive it, and then new greenfield developments do have to come in to keep meeting that demand growth going forward. So probably just to start wrapping it up, I'm just going to bring up a chart. Very, very simple chart. So whilst I am a fundamental analyst, in commodities, I think some simple reflection on the technicals and pricing dynamics can be quite important. So the chart I've pulled up is just the spot price over the last 3 or 4 years, data source from Numerico. So as you can see from that peak in early 2024, there's been a sustained down price in the uranium price. That's downtrend in the uranium price. The equities correlate quite well to this. So while spot might not necessarily matter from an economic perspective of the companies, it does matter from the equity trading or investing side as well. You'll generally find that the equities will correlate to the prevailing spot price. So what the chart is illustrating here is there's at least an end of that downtrend, and now we're in a consolidation phase as well. I think you're generally going to see positive news get bid in this consolidation phase. And these sort of phases do present interesting opportunities from an investing perspective, because you then get to buy with a base in the price. You're not worried, is it going to keep going down as much as you might have been 6 months ago? And then you get to look forward to what those catalysts are that might actually drive a re-rate in the spot price and then the equity price going forward. So I think in this case as well, in uranium, the D-rate in the equities has also been quite aggressive as well. So there's actually emerging value that you can buy on a fundamental basis with this technical tailwind as well. So yeah, and I will highlight that you might look at the URA ETF as well and think, oh yeah, this downtrend's well and truly over, it's getting bid. But when you sort of go through and digest what's actually driving that, you've got Cameco's almost a quarter of the index, and a lot of that's probably just the fuel business and the Westinghouse side of it, given the prospectivity of builds, and then most of the other top 10 sector companies are related to SMRs, technologies, or part components. So a lot of the mining equities have still been left behind, but if you pull up a chart and you draw the similar squiggles that I've drawn up on the screen here, you'll probably see a very similar pattern emerging as well, where the drawdown for now seems to be over. It's all consolidating. We're starting to look forward to the next catalyst that hopefully drive that re-rate that you would have by increasing your allocation to uranium equities or mining equities at this point. Thank you.
Josh. Great, Josh. Thank you very much for that. We'll just cut it off there, mate. Thank you very much for your time. We probably don't have any spare minutes for Q&A, unfortunately, but I think you covered it all off very nicely. So thank you for your time, mate.
Nice. Thank you.
Our next presenter is Dr. Andrea Marsland-Smith, the CEO of Alligator Energy, ASX code AGE. Prior to joining Alligator Energy, Andrea was a key member of the executive management team at Heathgate Resources, operator of the Beverley and Beverley North ISR uranium project and 4 Mile project in South Australia. Andrea was recently appointed CEO of Alligator Energy following a successful tenure as Chief Operating Officer. Under her operational leadership, Alligator has positioned itself to commence field trials at the Samphire Uranium Project later this year. To update us on this exciting progress and more, let's now hear from Andrea. Welcome.
Thank you, Alex, and good morning, everyone. Today, I'd like to take you through some of the key fundamentals of the company and the activities that we're heading into in the next couple of months. We'll be talking mostly about the Samphire Uranium Project today and our Big Lake discovery in the northeastern part of South Australia. Just to note that we recently had a successful share placement capital raising, so with our cash currently around $30 million, and gives you a snapshot there of what our major shareholders' percentages are at the current time. So South Australia is a tier 1 uranium mining jurisdiction, having been there's been about 5 uranium mines approved so far. We are hoping to be the 6th one, the next one off the rank, and we're moving our Samphire Uranium Project through the approvals steps as we move that further towards development. There's minimal political risk in South Australia. It's a very stable uranium mining jurisdiction. This project in Samphire has a staged long life project, we think, and it's got a significant ISR resource with a known expansion potential. So we expect to come to market about late this decade. We are going to be on ground with our field trial later this coming month, constructing the plant on ground, and then Q4 going through its operation. We've established over the last 2 or 3 years an experienced in situ mining uranium team, all of which have operated and been involved in the permitting of uranium mines, particularly with respect to in situ recovery. And then last year, we also had a discovery, which we think is potentially a new field for an ISR uranium prospectivity up in the Moomba Basin in the northeast of the state. I'll just drill down now towards the Samphire project, which is located 20 kilometres south of Whyalla. It's a regional town in South Australia that services other mining industries, such as the steel and iron ore mining industry. And so being so close to Whyalla, this project is not remote by any means, and in terms of its development, it won't be a fly-in, fly-out operation, of course. We'll source our workforce from Whyalla. The project is broken into two deposits, one called the Blackbush deposit, which is what we have been focusing on in the last 3 years as a company developing, and then the Plumbush prospect, which is another area of known uranium mineralisation around 5 kilometres to the south of Blackbush, which we will start investigating pending some further approvals and access in the coming year to prove that up as another satellite deposit to Blackbush. The Blackbush deposit itself contains around 18 million pounds and combined inferred and indicated with 14 million pounds in indicated. We've been drilling the last 3 years to get that indicated up and convert as much inferred resource as we can into that indicated category so that we could start looking at going into a definitive feasibility study. We did undertake a scoping study of the project back in 2023, and at today's long-term prices, it's already economic and it could attract funding at these prices today. We're looking at a 12-year mine life at around 1.2 million pounds per annum production. We've also, in our technical work, been looking at the integrity of the deposit and not only increasing the size, but we've got this deposit to a point where we can now start planning actual well fields for in-situ recovery mining and start that future mine design, which will go into our definitive feasibility study in the coming months. In that definitive DFS, we're also going to look at increasing the production rate from that 1.2 million pounds to 1.5. The deposit itself is around 80 metres below depth, so it's shallow, and so meaning the operation costs of continuing expanding wellfield costs are cheaper than compared to the other projects in South Australia. The map to the right shows the expansion potential of Blackbush. We've drilled all the way up to this fence line here, which is a division between one landholder and another. The landholder to the north, we have full access for mining to take Blackbush through to the production phase. South of that fence, we're currently negotiating access with that landholder, which is going very well and will be successful. So we hope in the new year that we will be starting to expand Blackbush to the south through those channel systems, and that the purple is there where the uranium is actually hosted in old riverbeds. So we've got the host well mapped out. It's just now getting into drilling and starting that expansion south of Blackbush. I mentioned Plumbush before. You can see here that the drill hole spacing is around 200 to 400 metre spacing. Blackbush has been drilled down to around 25 to 50 metre spacing. So it doesn't take much to consider that we could potentially start expanding the resource base at Plumbush and start defining a mineable resource. We've got mine grade intersections down there that we know of. And also between the two, there's limited drilling. So we've got a good 5 kilometres of strike length to start working on in the coming year. I mentioned the scoping study. This is just the metrics of running at 2 different long-term uranium prices. We're currently sitting around the middle of that now. When we look at a 1.5 million pound increase to the production rate in our DFS, it'll improve this NPV by about another $100 million. Going further out beyond the Blackbush and Plumbush prospects, you can see that channel system is very exhaustive, particularly to the south of Plumbush. And so we did a calculation on what we think the range of pounds might be there to realise, and we looked at the channels only that had drill holes in them, so we could assess the tenor of pounds. We think there's around 15 to 75 million pounds in this system as a range, and the channel system itself has only been drilled, 30% of it's only been drilled, so there's a good 70% of prospective channels still to explore. Our field recovery trial, we have been building the plant off-site for the last year and a half. It really is the final step in de-risking this project and heading into the mining lease application. This field recovery trial is a containerised plant. 3 areas of the deposit that we will test in an in-situ recovery style wellfield pattern with 1 extractor and 4 injectors around each pattern. We expect this to be operated around October to December into January 2026, around a 3-month operation where each well pattern operates for 1 month. And the reason we're doing this is just to ensure that we have that larger scale parameters such as uranium recovery, reagent usage, and efficiency in the ion exchange process that will then go into the definitive feasibility study. This is just some photos of the plant. As I said, we're ready to go. We're just waiting for the last lot of approvals from the state government to start constructing this on site. We won't be making any uranium oxide, but we'll be keeping the product around 6,000 pounds in solution for processing when we finally get to the mining stage. So this is the outlook over the next couple of months. As I said, we're just waiting now for the last lot of approvals. end of Q2 into this Q3 from the state government, into commissioning then and construction in the next quarter, and finally then into the operations. We're in parallel kicking off our DFS, and then as soon as we receive these approvals for the field recovery trial, we'll be into mining lease approvals, the baseline studies, etc., that you need to start to do as part of that. It also engages the federal government in an approval for a mining lease for the uranium mine, so we're going to start kicking that off as well. I'll just finish on our Big Lake uranium project in the northeast of the state, up near Moomba. These tenements were picked up because they're analogous in terms of situation to some of the Wyoming, Kazakhstan ISR projects, which are associated with hydrocarbon basins. So here we've got a hydrocarbon basin underneath prospective tenements, and the sediments above that basin host the Beverley 4 Mile uranium deposits. And so never before has a mineral explorer started to look in this area for in situ recovery style sedimentary uranium. And our inaugural program in August 2024 hit some significant thicknesses of uranium. Pending that, we had been analysing this for 2 years to understand where to best drill. We've come up with some great grades, never been seen before up in this area. We were then hoping to follow this up earlier this year, but the rains in South Australia prevented us from completing that program. And so we intend to get out there later this year in October, November, pending receiving of the flood waters, to then start really understanding what this system is and how big it is. So I'll leave that there, Alex. Thank you.
Thank you very much, Andrea. Thank you for your time. That was good. Exciting times ahead for Alligator as you move into the FRT. Just a few questions that got emailed in. We've got a few minutes, so we might just go through those if that's okay. But something we've been seeing in the sector is utilities and fuel buyers starting to talk to pre-production companies. So with you moving into the field recovery trial, is that something, have they been expressing an interest in the activities and plans?
Yeah, certainly. We attend all of the nuclear fuel conferences through the year. There's usually around 3 of them, and we have been meeting with utilities over the last 3 years, just so they know who we are and when our production is likely to come on. And the gap around 2030 is about the same time we expect to start to produce. So the timing of us coming online and their requirements are aligning very well. Big utilities such as EDF and Constellation, in the early days when we were engaging, wouldn't meet with us because we're, not too small or not interested at that point. But now they're actually requesting meetings with us. So the engagement of the big utilities is really ramped up, and we're seeing a big change. So we sometimes say if we're up for contracting, we could have contracted our Blackbush pounds 3 times over by now, but we're just sticking to a strategy and keeping the engagement up, and we'll look at contracting when it's the right time.
Excellent. Well, I think that takes us to our time, Andrea. So thank you very much. Really appreciate it. Thanks for presenting today.
Thanks, Alex.
Thank you. Okay. Our next presenter is Greg Bittar, the Managing Director of Lotus Resources, ASX code LOT. Lotus is on the cusp of an exciting transition to production as it restarts Alligator uranium project in Malawi, an asset previously operated by Paladin Energy and acquired by Lotus in 2020. First production at Alligator is expected this quarter. Lotus is also developing the Letlhakane uranium project in Botswana, which is one of the world's largest undeveloped uranium projects. Welcome, Greg. Please take the stage.
Alex, thank you very much, and NWR, thank you for organising and inviting me to this, and good afternoon, everybody. Very exciting time for Lotus. as we prepare for the restart of production at Kayelekera. And this really positions Lotus to be the next global uranium producer, the next producer of really any material size beyond the restarts we've seen through for the next 3 or 4 years. So a terrific strategic position for Lotus through Kayelekera. So sharing the screen, go through the notices. Combined, our two projects offer a significant large mineral resource of 165,000 million pounds spread across two projects, Kayelekera, and then the Greenfields larger scale, longer life, Letlhakane in Botswana. So we're well positioned both from an immediate market opportunity for the next 6, 7, 8 years with Kayelekera, but also that gives us the cash flow and the timetable to bring on Letlhakane to really step change the proposition for Lotus. Kayelekera is fully funded. We've made terrific progress on the restart. We hold on to about 77 million Australian dollars of cash at the end of the June quarter. We've got liquidity through bank and debt facilities, which are yet to be drawn, and we're in the process of commissioning the Kayelekera uranium mine in Malawi, and on track for our first production this quarter. As I mentioned, Letlhakane, longer term, longer life, larger scale, well positioned into an increasing uranium price environment. Just as a snapshot, current market cap of about 420 million Australian dollars, significant net cash. We've positioned the balance sheet with debt facilities, which we're finalising and which we expect to be able to draw upon soon. But we don't need to do that just yet, but we will do that for equipment finance, for working capital as we get into production later this year. Kayelekera presents 10 years of very robust mine life. Through steady state, we'll produce about 2.4 million pounds per annum for 7 to 8 years, for a total production over the 10-year mine life of about 20 million pounds. We see the ability to extend that through exploration and through metallurgical assessment. But at the moment, we're just focusing on getting into production, getting into cash flow from this restart opportunity. We will then start further exploration next year, and we will continue to progress our second project, which is the Letlhakane 100% owned Botswana project, currently with a resource of about 115 million pounds. Botswana is a very highly ranked mining jurisdiction. We've got the licenses in place. It's well located, and we're doing a lot of work in the background around optimising the metallurgy and the metallurgical studies to simplify the process, the flow sheet, to reduce the acid consumption, but also on the mining side. So we'll have more of a roadmap on Letlhakane later this year as we move towards PFS. We've reconstituted the board. We've brought in Simon Hay and Leanne Haywood as two terrific non-executive directors. Both have extensive resources experience, Simon with African experience and Leanne with Rio Tinto commercial marketing experience. But more importantly, this is the team that's delivering the restart, led by our COO, but really the team on the ground at Kayelekera. Asara Mansouri, our general manager of the project at Kayelekera, along with all of the key areas that have been brought in. And you look at the pedigree, you look at the experience of the team, and the team goes well beyond this chart to deepen the bench around commissioning and our operational capabilities. So very confident in executing the restart because of this team. We sit frustratingly today at a very heavy discount to our NAV. We have 0.5, 0.6 times broker NAV. If you see the light colours over there on the right-hand side, we soon shift to the left. We soon join those dark green bars of the producers well before any of the others, particularly the Australians on the right-hand side. So we do see the re-rate potential on the basis of being funded, on the basis of seeing pounds in the barrel in the coming months. An overview of Kayelekera. in Malawi. Malawi is not a very well-known mining jurisdiction, but we are very important to the economic growth of Malawi, and we have terrific support in country. I spend every 4 or 5 weeks over there, and I'll be back in country in a couple of weeks. This is the overall, the overarching schematic of the plant layout. We haven't changed the fundamental layout from when it was in production through until 2014. We've upgraded considerable parts of the processing plant. We've done full refurbishments around key pieces of the infrastructure, whether that be the mill, the power station. We're rebuilding the acid plant, and we've rebuilt in its entirety the internal workings of the drying and packaging area, which is the last stage of the processing and production process. And that's down at number 21. So we will produce a calcined product. This is the last part of the processing plant that will be commissioned, and we're looking forward to doing that in the coming weeks. Where are we on the restart? A lot of work was done through last year. We announced the accelerated restart strategy. We took out from the critical path to production a couple of long lead items or long lead aspects of the infrastructure that weren't required to actually start the mill. 2 things in particular was the rebuild of the acid plant, so we'll start on imported sulfuric acid, and the connection to the power grid. We always intended to, and we have completed the refurbishment of the on-site power. That was the way it was run years ago. We'll get back into production on that, using that on-site diesel power station, and we'll have that there as full redundancy, but we don't need to wait around until the grid connection later next year. It's a very important piece of optimising the operations here, and we'll have more to say on the progress and timetable for that also in the coming weeks. We fully expect that grid connection, which will see a material step down in our cost base, come online next year. We're well through 90% in terms of completion, whether it be mechanical and electrical. We've made terrific progress on the regulatory side. We announced on Friday last week that our environmental certificate will be issued within 7 days. That was the official notification we received from the government earlier last week. We actually didn't physically get it until Thursday last week, so we expect that certificate to come through mid this week, and that coincides with what we will expect to be ore through the mill. So quite a momentous period for the restart here at Kayelekera. Our focus, once we get the mill up and once we start putting ore through the mill, once we bring the drying and packaging area, the back end of the process online, it really is to get representative samples to the converters. We've got to requalify, re-establish our accounts with each of the 3 Western converters, and we expect to do that in the coming months. That's a process that takes time, but a key part of that is sending them briefcase-sized samples for them to do their qualification and their test work on. So that will also be a very exciting milestone in the coming months. Well positioned from a balance sheet perspective. This needs to be updated for the June quarterly, but essentially we've always positioned this balance sheet to give us flexibility around working capital. We did lock in place or put in place some binding offtake agreements. These were announced through the 3rd and 4th quarter last year and all finalised earlier this year. We've pulled back from a marketing perspective now, as you see the volatility in the underlying uranium price as we wait for utilities to come back into the contracting market. There has been under contracting in terms of the use and consumption of fuel by the utilities, and we are seeing some RFPs come back into the market now. But we embarked upon this initial set of contracts to cover 35 to 40% of our production for the first 4 years. This was to validate the restart story to get us back into the market so we could establish master agreements with some of these key customers. 3 of the 4 contracting parties are large North American power companies. So we're very comfortable with the margins that these contracts produce, with the delivery times and delivery schedule for these pounds. But at the moment now, with the balance sheet where it is, we feel comfortable that we can sit back and be a little bit more patient with the restart, building up some inventories, and then assessing where we take our contracting strategy. Some recent photos, some very recent photos actually, mineralised waste going into the mill in the top left, that's actually a video. We've got all of the bulk reagents on site, whether it be the lime, the magnesium oxide. We've had many trucks come through for the acid deliveries, filling up those large acid tanks at the back, in the back of the background of that truck. And it's nice to see the empty barrels, which will have the black protective coatings ripped off them, and the yellow hazardous stamps put on them as we fill them with uranium and get that off to market this quarter. Letlhakane is worth spending a moment on. This was acquired through an M&A deal Lotus did a couple of years ago. Terrific jurisdiction, mining license, water rights, surface rights, all in place for Letlhakane. This is an open pit free dig uranium project, 360 ppm from a grade perspective, and at the moment about 114 million pounds. So large scale potential, long life, whether it's 15, 20 or longer years, and a meaningful step up potential in our production profile. We've got more work to do around this. We're well through some column leach test work here at ANSTO in Sydney. We'll be saying more about that in the coming months, and we'll be saying more about how we're taking this project forward through to a PFS middle to third quarter next year. Alex, just we're leaving a couple of minutes for questions. I'm happy to wrap it up there.
All right. Good work, Greg. Thank you. Thanks very much for your time and for the presentation. Yeah, just one question emailed in was, I think you touched on some of it in the timeline slide there, but just a question on how confident, I guess, you are on commissioning timelines, just because obviously there's a large number of moving parts. And second part of the question was, when do you expect to reach steady state production, and what level is that?
Yep. Look, there are a lot of moving parts to commissioning, and we've presented that roadmap now consistently to the market for some time. We started with our first announcement many weeks ago around the cold commissioning, but this has been an iterative process. We've 2 weeks ago when I was on site, there was 550 people on site. Every aspect of this plant and this footprint had work phases going on. So it's not a case of waiting till the very end and flicking the magical switch and hoping that everything works. Everything is being tested as we go. So we announced cold commissioning in certain parts of the plant, and then some of those areas went quickly through to hot commissioning, which we didn't announce. Then we made the major announcement last week about the mill restart, and we'll make some more announcements in the coming weeks about further progress. So very comfortable with the third quarter positioning. We allowed whatever contingency we thought we needed in that third quarter flagging, so July, August, September, so remain very comfortable with that. And once we get through commissioning, as I mentioned, getting these samples, getting these representative product samples off to the converters will be a terrific milestone, because that starts the test work and that starts the final stage of the requalification process in establishing those accounts. In terms of run rate and steady state, we've got this sweet spot of 7 to 8 years of 2.4 million pounds per annum. We want to get to 200,000 pounds per month. So on an annualized basis, 2.4 million per annum. And I'm confident, I continue to say we'll be there in the first quarter of calendar 26 and hopefully early in the first quarter of calendar 26. So again, January, February, March next year.
That's fantastic. Very exciting times, Greg.
It is.
So yeah, we'll keep a watch on your progress, and thanks very much for presenting today and for your time.
Terrific. Thanks, Alex. Thanks, everybody.
You're welcome. Now, our next presenter will be Ben Vallerine, the Managing Director of Koba Resources, ASX code KOB. Koba Resources is exploring the high-grade Uranbah uranium project in South Australia, one of the world's premier uranium mining jurisdictions and home to all three of Australia's producing uranium mines. During Koba's maiden drilling program in 2024-25, they made 3 high-grade discoveries and are excited to follow up on the success when drilling commences next month. Koba has over 5,000 square meters of highly prospective tenure, including over 250 kilometers of paleo channels, all within a district where defined resources exceed 250 million pounds of uranium. To talk us through the multiple opportunities unfolding at Koba, we'll be hearing from Managing Director Ben Vallerine. Ben is an experienced geologist with over 20 years in the industry, including 10 years as a uranium geologist, with more than half of that in the USA, working on similar style geology to Koba's. Please welcome Ben to the stage. Over to you.
Thanks very much, Alex. Thanks for having me. We'll jump straight in. Just a brief summary slide here. Our Uranbah uranium project flagship is hosted in a Tier 1 location where Australia's 3 uranium producing operations are. It's in a world-class district. We've got 2 producing ISR operations within 120 kilometres of us, and we've got some really, really highly prospective ground, over 5,000 kilometres in that same district. An experienced team, both myself and the chairman have spent over 10 years working in the uranium industry. And then we've also had some initial uranium exploration success in our first drilling programs during 2024 and 2025, and we're an active explorer. So just a bit of a corporate snapshot. We've got a market cap of 6.4 million. As of March 31st, we had a cash balance at 1.3 million, and we're still finalising a $2.1 million capital raise at the moment by placement and an entitlement issue. Over the last year and a half since we acquired the Uranbah in January 2024, our share price has really tracked the uranium price. You can see on here that the navy blue is our share price and the light blue is the uranium price. And we really did track that until April this year when they started to diverge. Uranium price started to pick up again and our share price continued down. We're really expecting that will close in the near term as uranium fundamentals continue to improve and uranium price gains momentum. But let's get into the district. The Uranbah uranium project is located in the Frome embayment that's hosted 2 producing ISR operations. We have the Beverley uranium operation to the northeast. There's over 165 million pounds of resources there at almost 3,000 ppm. They've been in production for over 20 years of continuous operation, and they've produced almost 40 million pounds of uranium during that time. That's the world's longest continually running ISR operation. And just 17 kilometres to the south of us is the Honeymoon uranium operation. Now, there's 71 million pounds at 620 ppm there, and they produced their first barrel of yellow coke in April 24. So South Australia has the 3 producing operations, 3 uranium producing operations in the country, a very, very favourable jurisdiction. When we look at what we've got 5,000 square kilometres, 120 k's of north-south strike length, immediately to the north of Boss, highly prospective. And we made 3 discoveries during this year, Everest, Berber and Shivers prospects. We completed 123 holes during that program, and the first discovery was Everest, where we discovered a 4-kilometre long mineralised trend with multiple high-grade intercepts greater than 1,000 ppm, and that's just 4 kilometres to the north of adjacent deposit and the Honeymoon. We also made the discovery of the Berber. That's 60 kilometres to the north of Everest. There we intersected an extremely high grade, 1.6 million at 1,000 ppm, and also the Shivers prospect, about half a metre at 1,000 ppm in the same kind of area. And I'll get to these each as we move through. But I really want to focus on this little area just for a little bit. So the Uranbah Paleo Channel, that's a 35-kilometre stretch of the Uranbah Paleo Channel that hosts 50 million pounds of uranium. Talked quick about the Honeymoon mine, 36 million pounds, just 17 kilometres south of Koba's Uranbor project. They achieved commercial production in January this year. They also have the Jason deposit, which is 10.7 million pounds at 790 ppm, and that's just 4 kilometres south of the Uranbor project. That's a future satellite operation to Honeymoon. And then there's also the Sathron deposit, another 5 million pounds. So it's an extremely highly endowed part of the paleo channel. And the jewel of the crown is the Honeymoon mine. So this is Boss's Honeymoon operation. And, it's kind of what we're aiming to be. They declared commercial production in January. Ramp up continues on track. Their run rate is now at 1.2 million pounds per year. They're still in construction. They've got 2 of their columns up and running, and they're building the 3rd one at the moment, and they've still got more to come. Boss has achieved a market cap of around 1.5 billion. Extremely successful story, and this is the kind of thing we're looking to replicate. And how do I propose to do that? Well, we've got some of the best exploration ground in the country. That 35-kilometre stretch that hosts 50 million pounds, well, we've got 250 kilometres of paleo channels. You can see here in the orange, that is the same paleo channel, the same Uranbor paleo channel. We've got about 150 kilometres of the same paleo channel, and then over 100 kilometres of existing other paleo channels. So there's been significant regional exploration in the area, and this paleo channel has been shown to have mineralisation over 150 kilometres. Right up the top there, you've got Bingley North and Yakapu, all these little prospects north of there, 100 ppm uranium. So we've got a significant tenure, 5,000 square kilometres with so many targets. It's unbelievable. That's an outstanding exploration play, and we're aiming to make a significant discovery. That's what we're targeting. And how are we going about that? So let's just talk about Everest. So Everest we drilled in February this year, and that's located immediately north of the Jason deposit, still in that Uranbor uranium panel. As I said, the Jason deposit's 4 kilometres to the south, 10.7 million pounds. There's also a 2012 drill hole just 850 metres from our property that intersected multiple drill hits in the one hole. Overall, there's about 2.5 metres at 600 ppm. So where did we drill? February this year, we drilled 22 holes at what we call the Everest prospect. And we delineated a 4-kilometre trend of high-grade mineralisation. Now, we intercepted multiple holes. So 5 or 6 of those 22 holes intersected over 1,000 ppm uranium. And mineralisation at Everest remains open along strike, particularly to the north, but also in the east-west direction. We haven't defined the bounds of the mineralisation. And what I really like about Everest is that it's extremely continuous. So over this section here is over 2.1 kilometres. It's the southern part of the Everest trend. Drill lines are still spaced at 400 metres in this particular area. And there's significant opportunity to eliminate thicker and higher grade mineralisation because the uranium is so consistent. You can see on this section that the mineralisation occurs at a similar level, and it's been actually quite contiguous all over this 2.1 kilometre strike. That gives us great encouragement that there's significant mineralisation here to be found, and all we've got to do is zoom in, infill, and find that location where you get significant accumulations, high grade, thicker intercepts, and that's what we're aiming to do. I just want to move up to the Abarn deposit. That's about 60 kilometres to the north of us. It's got an historic resource here of 4.6 million pounds. It's where we started our 2024 drill program, and we had some significant success. 3.9 metres at 805 ppm, including 1.3 at 1200. So there's some really, really high grade results here at Abarn. And when you look at what they've got, this is some of the more historic results. 2 metres at 2,200. These are economic interceptions, and they actually hang together over significant distances. 2.65 at 1,100, 1.8 at 1,300. These are the numbers that you need to get mining. What we need is to find larger, significant accumulations of these mineralizations over larger distances to get the volume required to build an operation. So what we started doing to achieve that was stepping out away from the main resource to see if we can make a discovery. We stepped 1.5 kilometres to the south to the Berber prospect and 700 metres east to the Shivers prospect. And that's where we started to have some significant success away from the main deposit. The Berber was originally drilled in the 1990s with only about 10 holes. And we stepped out about 350 metres to the east of those holes. And that's where we intersected our best hole, 1.6 metres at 1,000, including 1 metre at 1,400. And that was the last hole we drilled at Berber. It's totally open to the east. It's never been to the east. It's basically open in all directions, particularly that 1 kilometre trend, which we're really excited about. We're going to target that this year. So we also stepped out to the Shivers prospect, about 700 metres to the east of the Yaban deposit, where we intersected significant mineralisation. Again, a metre at 630, half a metre at 1,000. Again, totally open to the east, never drilled to the east. That represents a significant opportunity for discovery, both of these prospects. It shows that the mineralisation in the Yaban area continues much further away than the main deposit, and it's really given us something to target in our future exploration programs. What are our next steps? So forward work plan. We've already got permits and clearances in place to test multiple high priority targets. The rig is booked in to commence in late August, sorry. Going to target extensional and infill drilling at the high grade Everest deposit. And then later in the year, we're also going to be planning drilling at the Berber prospect, test that particularly to the east where it's open, but also that 1.5 kilometre and see if we can connect Oban and Berber. Extensional drilling also at the Shivers prospect. And then we're also continually working on new targets in that Uranbor Paleo channel. I think we'll leave it there, Alex. That's probably enough.
That's great, Ben. Thank you very much. Thanks for your time and for going through that. Exciting times. Looking forward to you getting the rig turning again next month.
No, looking forward to getting out there.
We've got a couple of minutes and a few questions. One's come in from Steve. Given Koba's divestment from Canada and renewed focus on Uranbor prospect, is there potential to attain 100% ownership over the most strategic tenement area? So I don't know if we can speak to that one first, and then I've got a few that have been emailed in as well.
At this stage, I haven't had that conversation with the joint venture partner, Havilah. At this stage, we can move to 100% on production. So I think if we find a deposit that we can take through to production and mining licenses and all that stuff, then we can dilute Havilah by expending. But at this stage, we haven't had that conversation with them. But we'd certainly love to entertain that as an option.
And then talking about other players in the region, obviously with Boss, as your immediate neighbour, how do you see that potentially playing out with them so close?
Obviously, if we can make a discovery, then they'll be very interested in adding that. And if we can make a significant discovery, maybe we can be the next Boss. Bigger than Boss, bigger discovery than Boss. That's how I'd like to see it playing out. But I see there's varying levels of success at this program because we are so close to that honeymoon operation. If we make a small discovery that doesn't warrant a standalone operation, then there's a clear pathway to development by utilising Boss's infrastructure if agreement can be struck with them. But if we make a discovery that's significant enough, then we can go alone ourselves. So I see there's some really good optionality here and a real clear pathway to development given the jurisdiction and the location of significant infrastructure in the region.
Excellent. And the potential timeline for assays, if drilling's going to commence later this quarter, when do you think the news flow?
So we're planning to commence drilling at the end of August at this stage, and I'd anticipate, towards the end of September, we should be seeing some of those results flow through to the market.
Excellent. Well, there's with the number of targets you've got, there should be quite a bit of news flow. Looking forward to it, Ben. Well, thanks very much for your time, and thanks for running through all of that, and we'll keep a close watch on Koba's progress in the coming months.
Excellent. Thank you very much for having me, Alex.
Thanks, Ben. Have a good day.
You too.
So our next presenter will be Felicity Repacholi, Managing Director of Recharge Metals. Felicity is a geologist with over 20 years experience in mineral exploration and project development across Australia and offshore. She's led Recharge through its strategic pivot into uranium and secured high potential assets in the US at a time when energy security and nuclear investment are back on the global agenda. Stacey will walk us through why uranium is no longer optional and how Recharge is positioned to benefit from the shifting geopolitical and energy landscape. Take it away, Felicity. Please, please start when you're ready.
Thanks, Alex. Just checking you can see everything fine?
Yes. Yes.
Perfect. Hi all, thanks for joining us today. I'm Felicity Repacholi, Managing Director of Recharge Metals. Today I'm going to take you through why uranium is no longer optional, it's critical, and how Recharge is strategically positioned to benefit from major geopolitical and energy policy tailwinds, particularly in the United States where our project is. With rising global demand for secure zero carbon energy, uranium is re-emerging as a vital component of the global energy mix. It's now being viewed through the lens of energy security and geopolitical resilience, especially in the US. And our uranium assets position Recharge at the centre of that shift. Corporate snapshot, Recharge is tightly held with near on 256 million shares on issue and a market cap of under 5 million. Our incentive structure is tightly aligned to value milestones, including significant uranium targets. And this provides maximum leverage to exploration success and news flow. Here's our team and consultants. Our board brings deep North American and Australian project development experience, including permitting and geology, which is really critical as we ramp up our exploration in the US. For those of you who are listening to the talk prior, you would have heard our non-executive director, Ben Vallerine, speak. On behalf of Koba Resources. Ben joined the Recharge board when we acquired the Carter Uranium project, having resided in the US for 6 years. And whilst he was there, he built a portfolio of over 90 million pounds in Wyoming and Colorado. Our consultants provide local expertise with WWC Engineering currently engaged by multiple operators in the Powder River Basin. The global pivot back to nuclear is being accelerated by the strategic policy, particularly in the US. Trump has been very vocal about the need to fast-track uranium development to break up their reliance on both Russia and Kazakhstan. We're already seeing uranium prices respond, with uranium prices being up over 100% since 2021. We believe Recharge is well positioned in that context. Those statements are backed up in these recent headlines. You can see here we have Trump fast-tracking uranium approvals, AI-fueled energy demand is outpacing supply, and the US is really doubling down on nuclear development. This is not theoretical, this is happening now, and it's reinforcing the value of secure uranium supply from allied jurisdictions. And this is where the US is so focused on increasing that domestic supply. So where are we and what does Recharge have? Recharge picked up our flagship uranium asset, the Carter Uranium Project, late last year. We're located in Montana, on the border of Montana, Wyoming, and South Dakota. We're located on the northern outer rim of the Powder River Basin. The Powder River Basin has been successfully producing uranium since 1974. And there's 6 permitted ISR uranium facilities within 300 kilometres of our project. We're only 60 kilometres north of Peninsula's Lance project, which is one of the largest uranium resources in the US. Our project is an advanced exploration asset. We have existing historical resources and we have excellent potential to expand on these resources. And I'll jump into our project now. So here we are, this is the Carter project, predominantly made up of 3 main blocks, the Arcadia property, the Minty property, and the Ella property. We have 334 mineral claims, and these cover over 27 square kilometres. Our project is readily accessible by the US Highway 212, which you can see traverses the northern portion of our project, with various other roads providing easy access to our other areas. The area has been extensively drilled in the 1970s and early 1980s by multiple operators, including Kerr-McGee and Chevron. Over 3,500 drill holes have been drilled in the general area, and these have identified over 360 kilometres of oxidation roll front structures, which is where the uranium is hosted. You can see a few people have referred to the fact that this looks like a little bit of a Mr. Squiggle drawing with the green and red lines on there. The green and red lines are these oxidation roll front structures, these 360 k's of oxidation roll front structures that were identified by Kerr-McGee and by Chevron. The red lines represent the Fall River roll front structures, and the green lines represent the Lakota roll front structures. So you can see from this that there's multiple potential for us to expand within the area. These roll fronts, the Fall River and Lakota, demonstrate similar geological, hydrological, and metallurgical characteristics that are ISR amenable and that are currently being exploited within the area. I'll dive into both the Arcadia and the Mindy property shortly, which is where you can see that we have historical resources. And just a quick caution that the historical resource estimates are not reported in compliance with the JORC 2012 code. They are resources that were completed by Kerr-McGee, but have been reported in an NI 43-101 report subsequently. There's further information at the end of the report relating to those. So jumping into the Arcadia property, and this is what really made Recharge really want to jump into these projects. We're not jumping into a project where we're starting from scratch. We're jumping into a project where there has been a pile of drilling done at a huge cost, with roll fronts identified and with historical roll fronts, with historical uranium resources identified. The Arcadia property had 3.7 million pounds of uranium identified at 1,250 ppm. And just keeping in mind, lots of the other ISR operations in the area operated approximately 400 ppm. So we're well and above that operating kind of limit that lots of them are working at. We have managed to secure at this stage an estimated 87% of the surface expression of the Arcadia project. There's been a huge amount of drilling, at least 254 drill holes have been completed, mostly on 30 metre spacing, along fences of 150 metres. There's been some fantastic intercepts on there, as you can see from the map, including 1.83 metres at 5,400 uranium, 3.35 at 2,000, 3.65 at 1,700. So all fantastic grades for us to be working on. This roll front through this area that's been tightly defined is traceable for only 4 kilometres, but the resource covers only a portion of that to date. So we're really well positioned to expand on this resource and really test the depths of where this uranium goes to in a meaningful quantity. So significant potential to expand in this resource. Moving to the south of here, we have our Mindy property. Our Mindy property has 1.4 million pounds at 1,560 ppm uranium. And to date, we have secured approximately 78% of the surface expression. Again, fantastic intercepts within this area, 2.74 metres at 2,900 ppm, 1.86 at 2,600. So fantastic grades for us to further identify. Again, closely spaced drilling, 226 holes have been drilled on this area, again at this 30 metre spacing and fences of 150 metres, so really well defined. The Mindy roll front is traceable for 7 kilometres, and as you could see from that earlier picture with my Mr. Squiggle lines, extended both to the east and west, which is areas that we'll be looking at identifying and expanding our position into. So again, significant potential for us to increase the resource in this area. So why Recharge and why now? We believe that uranium in the US is the right place at the right time. So our US uranium exposure aligns with this next wave of US energy and industrial policy that we can see coming through. As a low market cap company at the moment, we are providing maximum leverage to exploration and success, news flow, discovery, and any of this policy support that will flow through from the US system. We have multiple targets identified with strong potential to expand on our existing resource base. So just to summarise, Recharge is strategically exposed to uranium as well as lithium and copper, which I haven't touched on today. These three are all key minerals of the energy transition. Our US uranium assets are well positioned to benefit from any of this policy momentum shift, which we are seeing on a weekly basis from the US, and we have some strong near-term catalysts. Thanks, Alex.
Thanks, Felicity. That was great. Exciting summary of your activities in Montana. I had a few questions. Now, could you elaborate on what drew Recharge to the Carter project specifically, and what's the competitive edge, I guess?
Yeah, sure. As I think I briefly touched on, what really drew us to the Carter project, it's obviously in a proven ISR uranium district with multiple deposits nearby, within that 6 permitting area operators within 300 kilometres. But I think the part that really set our project apart was the fact the amount of drilling that had been done in the 1970s and 1980s. So we're not starting from scratch. We've had all this drilling, we've got this massive data set to work on and the historic resources to build on with the expansion potential. So it's really kind of putting us ahead of the curve, all the work that's been done. We're not coming in fresh.
Yep, that's very valuable. And a question sort of related to that, so it's coming from Steve. Interesting question. How favourably do the costs of operations in the US compare to Australia?
Like everywhere, it's all the swings and balances. What we see in higher costs somewhere can be lower costs in other areas. I suppose one thing that's favourable is the fact that the drilling that we'll be doing is essentially just waterbore drilling, which is a reasonably cheap and effective way to do it. We don't have as many heritage issues over there, but some of our permitting costs can be a little bit higher. So it is all a little bit of a balancing act. In some ways very similar to the realm that we'd be operating in Australia.
Okay, good info. Now, with uranium sector seeing renewed interest, what do you think sets Recharge apart from other juniors?
Clearly our US exposure, we think it's the right place at the right time. All of Trump's policies are definitely pointing towards that. We have a really tight capital structure. We've obviously got a low market cap at the moment, so we don't take much movement, and investors will get that significant re-rate. And we think that existing mineralisation and historical resources that were identified in the 1970s and 1980s really puts us ahead of many of the peers and many of the newer players operating in that area. So again, we're just not starting from scratch, and we're working on these resources in a proven uranium producing area.
And good grades as well, good grades with those resources.
Yeah, fantastic grades.
So kind of looking out 6 to 12 months, kind of what kind of news flow and milestones should investors be watching out for with Recharge?
Yep, sure. So at the moment, we're actively working on surface use agreements, permitting, field surveys, essentially all tasks that are aimed at enabling us to get on the ground and start drilling. That's where we want to be. That's where our shareholders want us to be, actually actively working. So at the moment, all of the background work is aimed to get us on the ground and get drilling. So from that end, you'll see exploration updates from that side of things. With the aim that obviously the drilling will allow us to verify the historical drilling, that huge historical data set that we've inherited, and also looking at expanding the resource area. And our background kind of exploration work on those known roll fronts, those squiggles going through my map, hopefully may see some potential tenure additions if we can identify some other ground that we can get our hands on. And I suppose, they're all essentially what we can consider to be re-rating events for Recharge.
Excellent. Well, it looks like a lot of future catalysts lie ahead. It's exciting. Well, thank you, Felicity. Thanks for your time today. Thanks for running through that. we'll move forwards now to our next presenter. So thank you again, Felicity.
Thanks, Alex.
Our next speaker is Stacey Golokin, Director of Investor Relations for Asia Pacific at NexGen Energy. Stacey is the primary point of contact for investors across the region, playing a key role in shaping NexGen's engagement strategy. NexGen is a Canadian uranium exploration and development company advancing the Rook I project, one of the world's most significant and high-grade uranium projects. Stacey will now share the latest company developments and NexGen's positioning in the rapidly evolving uranium market. Welcome, Stacey, and please take it away.
Thanks, Alex. Good afternoon, everyone. Thanks so much for dialing in. I caught some of Josh's presentation and other presenters who spoke very well and comprehensively to the macro outlook and supply-demand fundamentals for uranium. So I won't touch on that topic during my presentation, as I'll probably just repeat what's already been said. So I will speak to NexGen Energy and provide a brief company overview for those of you that are new to the story, and then speak to latest developments at the company and then what's on the radar for the future. But before I begin, please note that I may use forward-looking statements and information throughout my presentation. So NexGen Energy, we are a Canadian uranium exploration and development company. We are triple listed on the TSX, NYSE, and ASX. We have a market cap of US $3.6 billion. And our flagship asset is our Arrow deposit at our Rook I project, located on our 190,000 hectare land package in the uranium-rich Southwest Athabasca Basin, based in the premier mining-friendly sovereign jurisdiction of Saskatchewan, Canada. Now, once in production, Arrow will produce up to nearly 30 million pounds of uranium annually, which is equivalent to 25% of total global supply and 50% of total Western supply. So we will be very significant once we come online. Now, the project is in the final stages of federal approvals, which I'll touch on shortly. But we have 100% support of all 4 Indigenous communities local to the project site. We have the team in place ready to begin major construction upon receipt of federal approvals, and we're fully levered to the uranium price. So 30 million pounds of uranium annually, what does that look like actually? So that's enough to power 46 million homes annually. That's all the homes in Florida, New York, California, Ohio, and Texas, all while removing 70 million car equivalents of CO2 a year. There is no other resource project in existence right now that will be as impactful as NexGen's Arrow Rook I deposit. So what actually makes Arrow so special? So unlike a lot of uranium mines that are typically hosted in the sandstone, in the wet, unconsolidated rock, Arrow is hosted in extremely hard, competent basement rock. Now, with the mines that are hosted in the sandstone, they require continuous and constant ground freezing in order to access the ore body. So that's very technical and very costly. We only have 100 to 200 meters of that wet rock before we're in the hard rock. So we only need to freeze the top part. And once the underground cavities and workings are developed, we can let the freezing go. There's no more required for the life of the project. So what that means is, because we're in that hard rock, we have a relatively simple mining method, analogous to gold and copper hard rock mining. And then because there's been very little water going through the ore body, once we bring that ore to surface, there's very little deleterious materials that have to be dealt with. So not only do we have a relatively simple mining method, we have a relatively simple processing circuit, we have extremely high grades that results in a very low operating cost of US $9.98 per pound, which generates some pretty compelling economics. Now, these figures here are based on a $95 spot price. We're at about a $71 spot price currently. Even with a $2.2 billion CapEx figure, you're looking at an 18-month payback period and a sub 40% IRR and $1 billion NPV and $1 billion in free cash flow. Some really incredible numbers here. And that's all because Arrow is a geological phenomenon. So the average global grade of uranium is 0.1%. Over 65% of our measured and indicated resources are at 15.9% grades, so 160 times the global average. So we have over 65% of 256 million pounds at that grade. So it's really hard to overstate the astonishing grade of this deposit. Now, again, because of our geotechnical setting, our technical risk is much lower, and we don't have large amounts of ongoing sustaining capex year in, year out associated with constant ground freezing. So we have high certainty around production volumes and can flex our production in line with market conditions. As a result, we will use a volume-based contracting method with price-related mechanisms set at the time of delivery. And so far, we've already signed initial sales contracts of £5 million with major US utilities. We have a strategic inventory of £2.7 million of uranium to help support us in further offtake negotiations and support our debt financing discussions. But the thing to remember about our contracting method is it will optimize the return on every pound produced, maximizing flexibility and maximizing value. So even if you don't agree with the spot price trajectory, because of our low cost, we will still be generating a lot of cash at lower spot prices. So we're highly cash generative in all pricing environments. Even at a $50 spot price, you can see we're generating $1 billion NPV and $1 billion EBITDA. As a result of these fantastic numbers, we now have expressions of debt financing interest of US $1.6 billion from a range of lenders that include traditional, domestic, and international tier 1 lenders, an export credit agency, and quasi-government owned bodies. That number is up from 1.4 last year, and we actually had a new party come into the process last quarter. So there's no shortage of financing interest with our project, given its strong ESG profile and great economics. Again, this is based on a $95 spot price, but once in production, we'll be generating over $1.5 billion in free cash flow, placing us in the top 10 mining companies of the world. Now, we made a very exciting discovery 3.5 kilometers east of Arrow. In March, we announced our best ever discovery phase intercept, even better than what we saw during Arrow's early days. In May, we announced our best ever discovery phase drill hole results. We had one drill hole showing 15 meters of 15.9% grades, with some sections showing up to 68.8% grades. We now have multiple holes showing strong, consistent uranium grades, and all signs are pointing to PCE potentially being a major new discovery. Our exploration has confirmed it's a shallow, high-grade area that's now doubled in size and is open in all directions. The things to remember are the grade and continuity look very similar to Arrow. It's in the same or similar geotechnical setting to Arrow, and we've even hit uranium mineralization 200 meters out. So we haven't even defined the outer boundary of this new system yet. So it's very exciting, but still early days. In January, we announced a drill program comprising 43,000 meters for the year. We have resumed that drilling program in June this year for summer, with a focus on PCE, expanding that footprint and defining that mineralization in more detail. But essentially, these results confirm to us that our Rook 1 is home to a vast mineralizing event. So as for permitting, we are now in the final stages of securing the necessary approvals to begin major construction at site. The regulators, the Canadian Nuclear Safety Commission, has officially scheduled our commission hearing dates to receive these approvals for November 19th and between February 9th to 13th of next year. Now, the permitting process has been incredibly rigorous, but in combination with the support of our Indigenous partners and the local communities, we are entering this final phase with full confidence. You may have seen that two of our Indigenous partners actually issued a joint press release expressing their disappointment in these dates and asking that the dates be brought forward. One of our Indigenous partners actually filed a claim in court requesting the same. Now, it's too early to say if or when this will have an impact on the timeline, but it is a testament to the strength of the relationship that we've built with the Indigenous and a testament to the strength of the project, because this is the first time in history that Indigenous groups have actually advocated for a mining project to be approved faster. Further, we had Mark Carney, newly elected Prime Minister of Canada, recently implement new legislation, Bill C5, which is aimed at streamlining project approvals for any nation building projects. And NexGen falls under that description. At this stage, it's not known whether or not that will impact the timeline, but for now, the dates are what the dates are. I think it's important to remember that we're entering it with full confidence with all the support of the local governments, Indigenous and the communities. So our cash position is really strong. We have 435 million cash on hand. That gives us enough runway for the next 18 months. The bulk of that will be on project capex, working capital, with the exception of some G&A items. As for what we have planned for the rest of 2025, we just received regulatory approval to begin our expanded site program, which includes building an exploration airstrip, upgrading our accommodation camps, and various site access roads. We still have 25% of our assay lab results to come in. Offtake contracts are currently under various stages of negotiation, and we're continuing advanced detailed engineering at site. Thank you so much for your interest. I think we can go to questions now.
Thank you, Stacey. That's a great presentation. Thanks very much. And those assay results from PCE are quite something. That's, what is it, 15%, 15 meters at 16%. It's spectacular. So yeah, a few questions come in. So NexGen signed its first long-term contract late last year. Have those commercial conversations with utilities continued to progress, and should we expect to see more contracting activity in the near term?
Yeah, so short answer, yes. We've certainly seen the anxiety amongst utilities grow, as have the inbound inquiries. WMC Group, a renowned commodity marketer and advisory firm, they actually approached us directly. They now act as our exclusive marketers for us. They don't represent any other uranium company, which is a testament again to the strength of the interest in our project. We've hosted site visits with utilities from all over the world. In August last year, we hosted a site visit with 7 utilities, which directly contributed to the progress of negotiations that resulted in the offtakes announced in December last year. Now, we are presently in discussions with utilities across North America, Europe, Asia, and the Middle East, and we are hosting another site visit for utilities shortly. So there are multiple contract negotiations underway at various stages, so you can expect more to be announced this year, but note that these won't be large volumes. So our early contracts will be more about building relationships and establishing a foundation for much larger contracts as we move closer to production. But yes, imminent. Short answer, imminent.
Excellent. That's good segue, building relationships into building the mine. And with federal approvals expected soon, you're moving into the building construction phase. You're going to need a lot of people. So are you seeing any emerging issues around availability of labour or workforce planning?
So we have quite a few things in our favor. So NexGen, it's quite a popular place to work for, given its profile. It's, a generational asset. We're seeing many opportunities come through our desk. What we need to look for, if it's the right cultural fit. We've had roles advertised before where we had, over 200 candidates. We're also really fortunate that we're based in a mining-friendly town of Saskatchewan, and we have a decent population close by with the appropriately skilled people for our type of mine. On top of that, a lot of those that are currently on the Alberta oil and gas patch will want to come back and work closer to home. We also have the town of Loloche, 150 kilometres away, with a population of, I think, 4,000 people. And since 2017, we've implemented many training and development programs with the local communities to encourage the hire of the Indigenous. And we've been focused on incorporating the Indigenous through as many jobs and contracts as reasonably possible.
Exciting. It sounds like you've got it all planned out and covered.
Yeah.
And going back to PCE, Patterson Corridor East again, with those results, it's clear there's something pretty spectacular there already. probably jumping the gun a bit, but is that something you might need a separate study for? Or, I mean, how does it fit into the big picture long term?
Yeah, good question. So as to whether or not it would require a separate feasibility study, a new FS has to be done whenever a new material discovery is made. So PCE will not come under the Arrow feasibility study. I also want to stress that PCE is outside the current federal review and CNSC licensing, so it'll have its own process with that. With that being said, we already have the pre-existing template pro forma for the provincial and federal permit process from the Arrow permitting process. And I mentioned the Canadian government already approving Bill C5, where they want projects to be approved in half the time. So potentially the process for PC will take less time. As for how it might fit into NexGen strategy, the early drilling results are really encouraging, and they speak to the potential of the entire area. Any discovery of this nature is obviously going to be incredibly accretive to the long-term mine plan of Arrow. So as we continue on our exploration and drilling program, PC has the potential to evolve into a source of additional pounds, support a longer mine life, and potentially it could be the next major district play in uranium, all on NexGen's 100% owned land package.
Fantastic. That's very exciting indeed. It's all right. Well, I think we're at time now. So thank you very much, Stacey. That was Stacey Golokin from NexGen Energy. Thanks for dialing in today and presenting for NexGen.
No problems. Thanks for the opportunity, Alex, and thanks to everyone for their support and listening in. If you have any questions, please feel free to reach out anytime.
Excellent. All righty. Well, thank you, Stacey. That concludes today's conference. So a big thank you to all of our presenters today and for everyone that dialed in. We'll make the recording available in the coming days for those that were unable to attend or want to watch anything again. So thank you once again and have a great day.